Hello, I'm John Generone, Editor-in-Chief of IPO Edge. Very excited to be back in New York City at the New York Stock Exchange during the 11th Annual IPO Summit. I'm thrilled to have back with us Shari Major, who's a partner at KPMG. She's a national leader of the capital markets advisory practice there. Shari, thanks for coming back.
Oh, my pleasure. Thank you for having me.
So Shari, last time I saw you was down in Palm Beach. You were on a panel with some folks from NYSE and some other partners of ours, and we were talking about the IPO market, which would appear to be coming back to life a little bit. What's happened since then? That was mid-November.
Yeah, so certainly we thought that in Q3 we'd see a bit of a window opening, and we had some strong IPOs, but really what happened is the aftermarket performance just wasn't where we expected it and needed it to be, which essentially closed the window again through the end of the year.
Interesting. It's funny because in the last few months, I think we've all observed the broad market keep running, but that's probably led by mega cap, right? So new issues, not the same story.
No, not necessarily. We have seen a bit of an uptick here in early 24, but really it's leading us to keep an open eye on what we're expecting to see in around the April-May timeframe. I think certainly there's been some good news around interest rates and rate cuts that we're expecting to see, and a good economy thus far. So if that momentum can continue without any crazy aftershocks from geopolitical crises or things of that nature, we should see, I expect, more of an uptick here in Q2 and 24.
All right, great. Now, let's talk valuation for a moment. A big problem, I think, with some of the deals that priced during the heyday, the wild days of 2021, was that they were just priced way too high. Do you think that new issuers are realizing that that's not the right approach and are going to be more conservative, even though the S&P is at an all-time high?
Yeah, I think so. I mean, I think the gap between valuations has started to narrow. We saw some IPOs occur in 23 that were at, down valuations, and I do expect that to continue. But I think investors are starting to wrap their heads around the fact that the valuations are not going to be at the 2021 highs that we saw, but are probably more, realistic, more comparable to what we've seen, prior to that peak. And I think it's going to bring, a little bit more momentum to the IPO markets as well.
Great. And if we can just for a moment talk about SPACs, which, of course, drove a lot of that frenzy back in 2021. My colleague just interviewed an investment banker from Stifel, and he explained, I believe, that, that SPACs do play a role, but, it's not for everybody, and it wasn't really used properly back then. How do you look at it?
Yeah, I think so. I mean, SPACs have been around for many years, and certainly we see peaks and valleys. And 23 was a much quieter year from a SPAC perspective, and I expect 24 will probably continue to be very similar to 23. But there are roles in, whether it's an IPO, a direct listing, a SPAC transaction. There are a number of different ways for companies to go public, and I think each method has its key, constituencies. So there have definitely been some challenges around redemptions, and just the volume of SPACs and de-SPACs has significantly dropped. And just recently the SEC finally did come out with their rules around SPAC transactions, where they're really trying to make sure that the requirements and the disclosures are really on par with traditional IPOs. So I expect we'll see that have an impact as well.
Great. And, you're talking about the IPO window opening. Hopefully today we'll get a glimpse of that, as you can see behind us here. Yeah. We have Ameris Sports, which priced last night and should begin trading any minute now. That company makes money, but it's also growing quickly. Do you think that, without digging into that company too deeply, is that the kind of profile that you think IPO investors are looking for? They want growth, right? Yes. But you want history and profit too.
That's right. We don't want growth at the cost of everything else. And really what we've seen is a renewed focus, I think, on profitability, or at least path to profitability. So that is much more common to expect to see, I think, in the companies that are going to IPO here in 24 and into 25. Great.
And now let's talk macro for a second. We got geopolitical tensions, but also rate cuts on the way. Many of us believe, I believe your firm expects 4 this year. Yes. Is that going to play into the IPO market if those don't come as expected, or they're more or less than expected?
Yeah, definitely. I mean, I think the anticipation of 4 to 5 rate cuts in 2024 is definitely a good sign for the IPO market. So if we don't see that, I think it's going to temper expectations to a certain extent. But there are so many factors that are at play, and rate cuts are one of them. But definitely, I hope that we see them actually come to fruition as we've expected and as we've predicted.
Now, if you can, I just want to unpack that a little bit further. Why are rate cuts good for IPOs? I mean, certainly for any growth company, if you're doing a discounted cash flow model, it's better to have lower rates because so much of that money is way out in the future. But what else do rates do that help the IPO market? Lower rates.
Yeah, I mean, it's just stimulating the market, to be honest. And really, if you're looking at, funding sources, that's going to certainly have an impact as well. And it's just really opening the appetite for, different entries into the marketplace. So I think that just has an overall tenor on the IPO market as well as other markets as well.
And now, without revealing who any of your clients are necessarily, Shari, can you tell us what kind of advice are you giving them right now versus the last couple of times we've met? Because I think the first time we met here was at the IPO Summit last year, was April, and it was really very much, take advantage of this gift of time. So we've had a lot of time to get ready. What are you telling your clients that are chomping at the bit, probably ready to go?
Yeah, absolutely. So for those who have taken advantage of the time, now if we think about April, May being a key time frame for the window opening, they should be very much in sort of, maybe early or final stages of rounds with the SEC and really just trying to finalize that progression to IPO. So some are definitely already in the pipeline, in discussions with the SEC, and really just watching the market for when the time is right. So I expect that to be happening here in the next, couple of months. And those that are, still continuing to watch, they're going to want to see strong aftermarket performance from those that do go out. And then I think quickly on their heels, we may see a bit more of a rush to take advantage of, what might be a positive sign. So I think it's all about fine tuning that readiness if they're still on the journey, but then really being serious about getting ready for, hopefully an April-May timeframe.
Well, it's interesting because something we observed here at IPO Edge was there were some companies that ultimately didn't look ready to go public, and they did back in 2021. Again, without revealing any identities here, have you seen clients actually take advantage of that time and improve things to where they're going to be in a better position coming out of the gates?
Yeah, absolutely. I mean, that is the type of work that we're doing with our clients, is helping them along that readiness journey. So whether it's around reporting or governance or just, system infrastructure, really it's, also about going public, but more importantly, being public. And I think that was the challenge those companies faced that, weren't ready when they went, is then you're trying to, be a public company while actually, really being a public company.
Yeah.
And so it's just a lot to do all at the same time. So, the clients we're working with are definitely on that journey. And, we see strong companies that we're working with that are in the pipeline, and, everyone's a little bit of a watch and see mode.
All right, one last question for you, Shari. As you can imagine, a lot of our viewers like hearing from you because you got that window into the pipeline that most people do not have. I'm hearing that consumer restaurants, those could be really big this year as IPOs come back. Would you agree with that? And are there any other sectors that you think would be interesting?
Yeah, and honestly, I think we're going to see activity in all sectors.
Wow.
I think definitely, consumer, we do expect to see. I'm focused on the technology industry, and there's a really strong pipeline of tech companies that are, waiting to go. And frankly, from the conversations I'm having, with market participants and with other advisors, we really do expect to see spectrum of activity all across sectors.
All right, Shari, we're going to leave it there. This has been Shari Major, who is a partner at KPMG, where she leads the National Capital Markets Advisory Practice. I'm John Janarone from the New York Stock Exchange, signing off.